Hi everyone, today let's quickly talk about the 30-year auction yesterday, then we'll get into the data, then we'll get into the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the 30-year auction had a rough sell this week. This is a new auction of 30-year treasuries, and people really weren't buying them. They say primary dealers who buy up the supply not taken by other bidders had to accept 18.2%, the highest since February of last year. The average this year has been around 10%, meaning that people are just not buying these treasuries at these current yields, and they're expecting a higher yield for the term risk, which means these people have to hold these notes for 30 years, and the yield that they're getting for that 30 years is not currently worth the risk. The yield is currently sitting at 4.83%, and you have overnight rates from the Fed sitting around that 5 to 5.5%, meaning that you can get much higher yields at shorter terms with less risk, making the 30-year note less appealing. In terms of effects, people not buying this means that the yields are going to go higher, and that's going to put more pressure on equities. We've been watching the 10-year go much, much higher, and when you get auctions like this is another driver for yields to go higher. And don't forget, we also have a government that continues to spend off the rails, running extremely high deficits. They ran a $1.7 trillion fiscal deficit in 2023, which was even higher than the previous year, with government debt sitting at all-time highs. Moving over to the calendar for today, inflation expectations came in a little bit higher than expected. 1-year inflation at 3.8 versus 3.2. That is not great. Consumer expectations were also weak. Sentiment also weak. So not a great day for data today. Moving over to earnings, basically everybody beat. PNC Financial missed on the top line, so did BlackRock. Everyone else beat on the top and bottom line, and we're off to a pretty good start for earnings. There was some concern over the banks, but that doesn't seem to have materialized in these biggest banks. Moving over to Max Payne, we talked about that put wall at 430, and that we could drift just a little bit higher to maybe 433 or 431 to the downside, and we ended up drifting basically to that 431 level, just short of this put wall at 430, and basically got a close that we expected from yesterday's Max Payne. Moving over to the charts, we'll go through this pretty quickly before the Sunday video where we go much more in depth. 1 hour, you can see we rallied in the pre-market, hit that level, then broke down. Took out my level at 331.70. We're breaking down a little bit more after hours. Hourly chart, you got the 200 sitting at 428.87. That's going to be an interesting level just above my previous level. We also wicked the 144 and 9 EMAs on the daily chart. Then we found a little bit of a bounce from that level, but you can see momentum rolling over here on the daily chart, which typically means we're going to see this roll to the downside at least a little bit more over the next week or so. Moving over to the NASDAQ, similar thesis, pre-market rally, broke down. We have the short-term EMAs in order here now. We touched that 144 on the hourly, sitting at 363.98. Then we rallied back up to my next level at 364.84. We're currently holding right there to the penny after hours. If this holds, could be a higher low setup and a little bit of a rally. You can see on the daily chart we hit that 9 EMA as well as very close to VWAP. So interesting level, back testing that trend line here. So far it's held, but momentum, you can see that step down. Typically when you get a step down of that magnitude, you see a little bit of a follow through, just like we saw to the upside here. So I would expect this to come down a little bit further over the next week. Moving over to Apple and Tesla, big time red candle, momentum rolling over on Apple. We're still at my level, 178.58, just barely above it. You can argue that if it holds, you're still in good shape. But again, we got a step down in momentum, RSI pulling back, and I would expect this to come a little bit lower before we find any kind of realistic support. Similarly here on Tesla, we had the confirmation candle yesterday of a bearish move. Sure enough, big follow through on the day, took out my level. Down to that 55 EMA. We're technically below it, sitting at 251.33. And at this point, you would expect to move down to either of these previous lows. But if it takes out this midpoint here, then you have to start to zoom out and look at this structure. That would be a high, lower high, taking out a midpoint. And you would expect a bigger pullback, in my opinion. Moving over to staples and discretionary. Staples continuing to find strength. You have a clear double bottom now at my 66.27 level. Need this to hold, break out above the 21, start to rally, take out a midpoint. That could be bullish. You have bullish momentum here on the 4-hour chart. This is probably one of the better looking charts here in the short term, despite this longer term downtrend we've been watching. Discretionaries falling off a cliff along with Tesla, bearish momentum, bearish RSI, big volume on the move. Does not look particularly good. We do have some really solid support at 158.03, so you can still watch that level, but this structure here now looks weak. Moving over to breadth. Surprisingly, breadth did not sell off that much today with the bigger down moves that we saw across the board. Basically held right where we were. We didn't even take out the wick here on the 50-day average. Similarly here on the 200-day average, we're basically in the same zone. Momentum did step down on the 50-day average. That's the first step down that we've seen in a while. We had been in bearish and then rolled up into that bullish move. Now, if we pull back and test that 21, you still want that to hold around that 22 level. And that's still possible here, but interesting to see breadth holding up despite the down move. And we'll take a look at this on the weekly chart on the weekend video. Moving over to the dollar here, you can see we dipped down overnight, rallied up into this session here, hit that trend line once again. We are still below it, so this is another retest. Got a first test, retest, we're still below it. And if this breaks down from here, that could be a big swing to the downside and give equities more room to the upside. But we really need to see that follow through here. We've broken down, retest. You want to see that bigger push down. Still possible. If this breaks out here and makes a new high, then we should expect equities to be going much lower. Moving over to the volatility indices, move index rallied a little bit. Momentum still fading there. VIX, on the other hand, showing a ton of strength. We talked about testing this trend line in the 55 yesterday. That level held, we gapped up and rallied. Makes sense with equities pushing as low as they did today. But now we retested this previous high. The question is 20 going to hold? Or are we going to get above 20, which we haven't done for quite a while, going back to March of this year, where we spiked all the way up into this 28 area. We still have trend resistance up around 24.80, and if we got into that zone, we could potentially see a nice solid bottom form, and then we could see equities rally over the next couple weeks. But the question is right here at that 20 level going into the Monday session. Moving over to my accounts, I did okay on the day, down about 1/3%. $350 on the day. IWM was down just short of 1%. I obviously had calls on there to help protect me. And I have another call here for the Monday session at $1.15. So looking to sell the stock around 171.15. It's down a little bit after hours, just below that 170 level. So decent protection going into the Monday. Qs, still have my covered call position. I continue to roll these calls down to 366. I still have about $300 credit on that position, and then I did sell some for Tuesday at 370 for 78 cents each, so about another $150 potential on that position, just to help protect me to the downside. I do have a little bit of room to the upside if we do see a little bit of a rally on Monday, but that is not my expectation currently. I'm really positioned neutral to bearish going into the Monday session. Let me know down in the comment section what you think of the Treasury auction. Is that going to continue to worsen? And how will that affect equities? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.